Finished down 0.5%, the NASDAQ down 1.47%, the NASDAQ 100 down 1.62%, Russell down just 0.6%, and the Dow Jones down about 105 basis points and or 0.20%. It's hollow point trading. Let's get into what happened in the market today. Google, we had a few other stocks here. Google had a $27 drop here from the top here today, an insane drop, by the way. Microsoft did sell off towards the end of the day. It did gap to 405, but it did finish the day positive at 1.38% after being up, I think, 2.something%. We did have Netflix that did guide down after hours on their earnings call. They're down about 9.11%. Even though they had record-breaking earnings, I think there's still an issue that was overlying and kind of outlying from their previous ER. If you looked at my previous SOXX report. Here on the SOXX, we are down about 14% on the day and about 4% more on the after hours, so about 17% down in the day, probably a little bit over 30% on the week. And we do have a bearish pin here that formed out, and that is another rising three. No different from here. It looks the same thing, comes in all different shapes and sizes. Right here, rise up, drop. It's the same thing. If you draw your candles in just like this, right, up, 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 right, and then you drop here, right. It's the same exact thing here. Candle down here, draw it up, whatever, blah, 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 right? Back down. It's not that hard. It's not that difficult to understand. But we did crack that support on the NASDAQ, however, today, right at close. Let me show you. So the NASDAQ broke its 55 EMA support, which I believe is, institutions, kind of dealers, hedgers, etc., etc. And so for me, this is a simple concept here. You break yellow, I'm out, right? I'm not going to get involved until, something else happens, etc., right? We do have back-to-back falling threes here. So if we go to the weekly time frame here on the NASDAQ, you have a falling three bearish pattern here. They're back-to-back, right? Two candles up, down, same thing. These are control bars. This is controlling price. One way I like to kind of view price is from the top to the bottom here on your candle, draw your 50% line. If you're above it, bullish, below it, bearish. It's that simple. I've been saying it every single day in these videos. Above it, bullish, below it, bearish, right? Right here we went again. Okay, so those are your kind of areas of interest right here. They're not quite the same. It looks like they're stacked on top of each other because they're thick. But right here again, you have another bearish engulfing candle here in progress. It is going to close here in the next 19 hours. Right here from the Fibonacci perspective here, I mean, as long as we're under, if this candle keeps going down lower, obviously this is going to change, but at the moment here, under 650, bearish, right? Falling three chart pattern looks like this. It comes in all forms of different shapes and sizes. Break those conditions. We do have a bearish reversal confirmed on the NASDAQ. The 10 dropped below the 50, green line on the screen, 20 dropped right below it. But we don't even need to look at this script. This is what I use for AI to kind of talk to you guys, but obviously I've been doing a lot more work to where I can just talk to you right off the top of my head. I'm just really busy throughout the day. If we take a look here at the NASDAQ chart here, we did break our 55 EMA. This is the weekly time frame here on the NASDAQ right now. And obviously we have a bearish falling three here. This is a bearish evening star here as well. This is a bearish engulfing candle here. I don't want to get involved in a chart like this. If you drop your fibs here, obviously you shouldn't get involved till the chart gets back up here to 650. There's really nothing else to talk about here. When we look at other stocks here and how they kind of reacted today, we did have a falling three back to back. It doesn't have to look exactly like three candles, but it's the same concept, like a rising wedge, falling three. Here's your control bar, drop down, come back up here, try to recapture, same thing, right? Come back down here, and now you broke your 55 EMA institutional support on the daily time frame, which is king. We obviously have had a gap up. We had a dragonfly doji candle right here. We did break down below. Currently right now we do have a bearish engulfing candle here in progress. You could argue this is your right. You're creating a rising wedge over here. Really nothing, just a bunch of dojis everywhere. Really just telling you nothing. Just a bunch of indecision here. I'm not going to mark anything in that time frame. I'm going to go down here to the 10-hour time frame right here. Still virtually the same chart, no different from the daily. Going to go down here, maybe the 2-hour time frame. Maybe you can see something here. Barely holding on for dear life to your 55 EMA. I believe after hours here, ES, let me just go ahead and check ES, is probably down close to about 0.55% after hours here. So again, right here, the S&P daily, which is going to open up tomorrow, has broken its 55 EMA here. Let me check the daily time frame to see if it's still holding up here. Not quite, but it looks like that's what it's heading for here. So again, simple concept here. If I just draw from the top here to the bottom, Above it, bullish. Below it, bearish. We don't have to get involved. You do have a bearish falling 3 here again. Again, keep in mind, no different from how we had here on the NASDAQ, right? Patterns are all everywhere in your face. You just have to believe them, right? You have to react to them, right? Going to fall apart. Trump is considering getting back into expanding military operations. I'm telling you, this peace deal, everything about the peace deal is fake, and no different from how they got you last year with the tariffs. We have tariffs, no tariffs, tariffs, no tariffs, tariff deals, no tariff deals. We kept going up and down on the same information to the point where we just went up, and up. And I warned you guys back in February. I think this is the war for the first time that you got people that have been fighting before Christ. Iranians have been fighting before Christ. These guys don't fucking quit. They die for what they fucking believe in. Something that us as Americans apparently don't believe in at all. Nobody plays with conviction in the market, but at least these motherfuckers out here, right? At least they're willing to fucking die for something. But again, Trump is expanding military operations in Iran. It's a headline that people keep glossing over because nothing's happened. What's going to happen when something actually happens? Just ask yourself that. If there's a 1% chance something happens, what happens if that 1% chance actually happens and we actually see escalation? You're talking about fucking global pandemic, global lows we've never seen before, and nobody's going to tell you the fucking truth until they say, oh, well, nobody could predict that, but I did. I'm telling you right now what will happen. Striking during the day. The Strait is still closed. We keep talking about opening up the Strait. We were told before, if the Strait's closed for more than 1 to 2 weeks, it's critical. It's been 4 fucking months that it's been closed. So is it critical or is it not? Like, what's happening, right? And these are things that people don't understand, right? So let me go back to the chart here. I'll just get up a clean chart here. We have the S&P here. I'm going to go ahead and chart this in real time with you guys, just so you can see where I get my levels from, just so you can see where my head's at. So the S&P did close below its 55 EMA on the daily time frame here. Let me go ahead and my 55 EMA, excuse me, that's not the S&P, excuse me, rather than the NASDAQ here. So I'm going to go ahead and just start charting here in real time. We're going to go up here to the 3-month time frame. I do want to go there. Doesn't feel helpful for me on the 3-month time frame. I'm going to go down here to the 2-month time frame. Still don't see anything that I'm looking for. Just ridiculous candles here from all the scam market. 1 month, don't really see anything here that's notable, but I do see a possible reversal here, right? This is the top of this doji here, which is at the 7320 spot where we rejected on. So again, simple concept for me is I do see something that can work out from here. I'm going to go ahead and mark this line here what the 50% line is. Again, above 47469 from a monthly basis. Again, we're bullish. Below it, bearish. I'm going to go ahead and mark these levels off here as well, which I normally don't do, but I am going to do. Gonna work my way down here to the weekly time frame here, and again the same chart here. Look at this. So we had a morning star right here with the dragonfly doji. The same chart here, right, that occurred on the NASDAQ. Look at this. It's the same stuff, guys. It's just that the S&P has not gotten a confirmed reversal of conditions here. But if you look here at the chart here, you go back over here to the NASDAQ, right? Let's just clean off this NASDAQ chart right here. You clean off the chart. It's the same shit, guys. You guys are just too fucking blind to see it. Go back over here. It's the same thing. We just have not received an engulfing candle, which would confirm a burst reversal of condition. Up here as well, evening star here on the weekly, which is a key time frame as well. Obviously, you did lose your institutional support. Here are my levels for gold all the way to the downside, targeting here at 3,650, and then for the lower level price target extension here at 3,106. Obviously, there's a lot of factors here that contribute to that. A lot of macro and fundamental kind of things as well as technical as well that support that case. But this is what I'm looking at for a long-term setup for a swing and continuation here on the downside for gold. Trades here. This is Discord. We did quite well today. We took 712 puts here that printed amazingly here. We closed them out here within not even 5 to 10 minutes here. Got $1,000. QQQ did drop down to 703, so these would have been amazing. But again, we have to be we're in a market where things are kind of moving swiftly. Moves. These printed for about $2,000, and people in the community did really well with these. Check out this short video here detailing the trade. Bang! We're just banging on a damn 1,000, baby. And I'm a big proponent, a big believer it is. I really want everybody here to step up. I really want everybody here to do better. where a lot of people are looking at these charts and they have no idea what's going on here. A lot of people don't know ATR. A lot of people know what true range is. A lot of people are taking stocks in different option calls. Like for an example, let's say that Google throughout the day or throughout the past few months only moves 1%. Let's just say Google moves 1%. You have people here, right? So if it moves 1%, what's 1% of 350? I know it's not 370, but you have people up here grabbing 370 calls when the stock hasn't moved for so long. Left, head, right, bang. Textbook stuff here on a 10-minute time frame. Obviously, you can see it from any other time frame primarily. But a lot of people, they're grabbing calls that are never going to print in the money, and they're doing it every single day for zero-day options, for links, for sweeps, for stocks that don't even move like that. You're in a market now where you have like all this stuff, and I don't really know what to say about it anymore. You have all these moves, you have all this stuff. Everyone's just rotating. You go to Microsoft, you go to Sound, you go to Bull. Guys, pull up these charts. You need to look at them. Pull up SoundHound, okay? Pull up gold, guys. Pull up gold on the weekly, okay? Pull up SOXX on the weekly, guys. It's the same chart. Nobody believes it till it happens. Pull up Micron on the weekly, right? I get that it went up. I get that it was amazing. I get all these things. Stop acting like the stock can't go down, and then you get mad when someone fucking tells you it's gonna go down. The best piece of advice I have, guys, is pull up these charts here. Oracle, MSTR. The list goes on. Pull up these charts here, guys, and look at what happens. They're doing it again to you every single day. They're doing it again to you. They're rotating. This is a cycle. It's not different this time, man. Stop listening to the guy in their mom's basement. AI should have never been up here. The market only goes up on lies. It never goes up on the truth. It crashes down hard on the truth every fucking time. I made a video the other day. I said what? I said Micron out, SK Hynix in. They're gonna fucking sell Micron. I made a YouTube video. Nobody took the play. Nobody. Step it up or get the fuck out of the market. You got no fucking business in the market if you ain't a fucking serious trader. That's hollow point energy. That's hollow point out, bitch. Do better, bud.
Welcome to this video companion for Operation Dead Calm. We will break down the Thursday session, chart by chart and article by article, in the order they appear. Please note that this content is for informational purposes and is not financial advice. We begin with the S&P 500 daily chart. The index shows a swing high at $7,620.90, which was rejected at the trendline. The current close is $7,533.77. Our verdict: look for lower highs below the swing high. If the red shelf level is lost, the June 9th sequence begins. Next, the Micro E-mini NASDAQ 100 daily chart. We see back-to-back rising threes and a break of institutional support. The index closed at 29,178.50. The verdict is that institutions have flipped to net sellers. Watch for downside targets at 28,103, 27,173, and 26,233. This video covers 16 segments, following the run of show on screen. Our primary thesis remains: the current dead calm is a warning sign, and crash wave 3 is loading. Moving to segment 1, the S&P 500 daily chart. We will examine what the S&P needs to show before a larger sell-off can initiate. Here is the setup for the S&P 500. Bearish conditions are not yet confirmed. We require a push below the 10-period moving average and a break of the June low. The S&P acts as our confirmation index for the broader move. The current sequence is divergence, followed by a lower high, then a lower low. Two of these criteria have been met. The final step is the June low takeout, which will solidify the bear case. Segment 2 focuses on the NASDAQ 100 daily chart. Unlike the S&P, the NASDAQ already exhibits the necessary bearish reversal conditions. Let's look at the current alignment. On the NASDAQ, the 10-period moving average is dropping below the 50-period. Institutional support is broken. If the 20-period average joins the 10-period below the 50, the bearish arrangement will be fully locked. When we see bearish alignment, a lower high and a lower low, the probability of crash wave 3 increases significantly. The NASDAQ leads here, and the S&P serves as the follower. Segment 3 examines the signals board. We will review our daily and weekly signal systems to see what has flipped, what remains mixed, and what will lock at the Friday close. The board remains mixed. While the NASDAQ daily signal is bearish, the S&P daily is mixed. Our verdict: these whipsawing signals often lead the crowd to ignore them until the definitive signal prints. The NASDAQ signals are turning bearish, but the S&P is lagging. When the laggard finally joins the leader, the move is usually already underway. We are watching for this alignment closely. Weekly charts are provisional until the Friday close. We are currently observing a signal level divergence between the two indices. We will know more once the weekly candles lock tomorrow. Finally, we arrive at segment 4, where we analyze the weekly structure. We will cover the rising wedge, the log trendline from the 2021-2022 peak, and the competing counts. We are now looking at the weekly trendline rejection. The market has hit the log scale trendline from the 2021-2022 peak and turned off of it. We are seeing a rising wedge that has been rejected twice, suggesting the market is deciding how it falls. Here we consider the only remaining bull case, that this is a wave 4 triangle resolving higher. Even if this plays out, it leads to the same terminal trendline, suggesting this is a delay rather than a new bull market. Moving to segment 5, we address short-term momentum. We are examining the bounce warning and the February 2025 echo. Momentum has turned back to bullish inside the current sideways range. However, we have seen this identical back and forth pattern before, right before the 21% decline at the February 2025 peak. This chop at a ceiling is likely the flat line before a drop. Segment 6 covers the sideways precedent. This coil pattern has printed twice before, and we are now evaluating what followed on both of those previous occasions. History shows 2 instances where this sideways shuffle led to significant drops of over 8% and 13% respectively. We are currently inside what could be a third print of this pattern, with Friday's close serving as our deciding factor. Before we continue, please remember that this operation requires significant effort to produce. If you value this analysis, consider supporting us through our Discord community or our funding partners. Segment 7 brings us to the VIX. We are backtesting the 50-period moving average and the trend line, with a bullish divergence loading beneath. The VIX stalled at the 50-period moving average at the close. A move above this level would signal volatility resumption, while a failure suggests the S&P might target overhead gaps. This bullish divergence on the VIX is a major warning for the markets. Our intel poll highlights that earnings season is opening with the AI trade showing signs of cracking. With semiconductors down 20% and complacency at maximum, the market appears priced for a calm that may not last. Segment 8 shifts to crude oil. It is currently flat but remains 21% off the lows, having broken out of a falling wedge and coiling for its next move. Our previous call for a bottom at the 200-period average played out as expected. With the 10 and 20-period moving averages crossing, short-term momentum is aligned higher. Crude oil is likely headed toward new highs. Segment 9 is our war desk. We are reviewing the articles and the intel that verify the calls we have made in this video. As flagged weeks ago, the United States has returned to full combat operations against Iran, confirming that the ceasefire was indeed dead. Our analysis correctly identified this tipping point, despite widespread skepticism. Finally, strikes are now occurring day and night, targeting both military and IRGC personnel. This increase in tempo is a clear indicator of expansion rather than maintenance in this conflict. We are now looking at potential ground operations. There is talk of seizing Karg Island, which handles about 90% of Iran's oil exports. As we have said, that is the regime's wallet. It is a critical tactical development and highly bullish for crude prices. Next, the infrastructure phase. Reports indicate a planned schedule for strikes on power plants and bridges for the coming week. When a regime begins facing these terminal decisions, the conflict enters a new, more volatile stage. The rail line used to transport weapons from Russia and China has been struck. This effectively cuts off land-based resupply routes, complementing the naval blockade. Iran's ability to import equipment is being methodically strangled. We are now seeing a dual blockade, the Strait of Hormuz at sea, and now a severed land axis. This two-axis pressure significantly increases the likelihood of an internal regime collapse before any direct ground invasion is even required. Tehran is threatening major retaliation, specifically targeting regional energy infrastructure. We are watching this closely, as an actual hit on Gulf energy assets would likely create an immediate crude oil spike and a simultaneous equity sell-off. Some labeled our geopolitical analysis as incorrect, but the scoreboard speaks for itself. By maintaining objective methodology, we called the end of the ceasefire and the resumption of combat operations, while others were focused only on narratives. Looking at the endgame, there are 3 primary paths: a forced deal, internal collapse, or escalated conflict. Regardless of which scenario develops, the intermediate outcome remains bullish for crude oil prices. Moving to segment 10, we discuss the monthly thesis. We are observing significant negative divergences in the monthly time frame that point directly to the 3-part shock currently unfolding in the markets. The core thesis is a combined event: war, an energy shock, and a tech unwind. These are not separate phenomena, but rather one single trade unfolding as we see crude oil surging and the AI bubble begin to deflate. Segment 11 turns to the semiconductor sector. Given its position as the market's primary leader, we are examining the candlestick sequences on the SMH and SOXX that signaled this turn well in advance. Selling pressure in semiconductors intensified throughout the session, dragging the NASDAQ and S&P lower. This group, which led the bull market, is now clearly leading the descent. Looking at the SMH daily chart, the technical structure is failing. The 10-period moving average has crossed below the 50, and the MACD has officially entered negative territory. The divergence we warned about has become the reality. On the SOXX weekly, the pattern of a hanging man followed by a bearish engulfing sequence has now seen its follow-through. The price is now pushing below its 10-week moving average. The damage report is clear. SOXX is down over 20% from its peak, with a nearly 9% drop this week alone. SMH is down almost 17% from the highs. These are the numbers the market was told could not happen. The semiconductors provide the clearest message. Because they led the market up, they are the first to tell the truth on the way down. Complacency meant ignoring the signals, but price action has now arrived to settle the difference.